Nigeria's big industrialist and Africa's richest man, Aliko Dangote, says, no power, no economic growth. He says that was as simple as it can get. That's what he told Godwin Emefiele and the rest of the big boys that were policymakers and business leaders last Saturday at that get-together. So let's talk about the power sector and why is it difficult for Nigeria to find solution to this industrialization's Achilles heel? Let's talk to Ayeye, who is a financial expert and a CEO at a GDL Asset Management, is live to us from our studios downtown Lagos at the Stock Exchange. Kola, good morning. Good to have you on the show.
Oh, Bosin, thanks a lot for having me. Good morning.
It's good to have you here. Let's go straight to business. Aliko Dangote says, no power, no economic growth. He says it's as simple as that. Do you agree with them?
Definitely. Without sufficient power, the objectives of economic growth will remain a mirage. You can't have a functional and strong manufacturing sector, which a country of 200 million people needs without power. So I agree with him. We need power in order for the economy to grow.
Yes. So why do you think this is been very difficult for Nigeria to achieve? If you remember the fabled Achilles heels, which is that part of the back of your feet where it makes it difficult for you to move. We want to jump, and that's where the arrow goes. I remember the story very well. This Greek mythology and all of that about Achilles, that fighter and very big warrior, but he had a problem. His heels is where his powers were, and when they wanted to catch him, that's where it was targeted with an arrow. So why do you think power? How do we resolve this? How do we get, how do we cover this Achilles heel, get it out of our bucket, remain, jump the economy, ramp up on industrialization?
Thanks a lot, Bosin. If you just allow me to back up a bit, I think it's amazing how 20 years flies. 1999 was the beginning of democracy, and 20 years later, we're still unable to regularly will and deliver to the last mile, 5,000 megawatts. Like Elijah Aliko Dangote said, if you ask me, in the socio-economic space, leaving the political space, if you look at 20 years of democracy, power is clearly one of the major failures. I mean, I identify 6 things that could have happened in 20 years that didn't happen, power being one of them. You know, but coming to the point about dealing with power, I think we need to look at 3 factors. One is, who are the actors? Are the actors the right people? Do they have the required technical and financial competence? The second is, are the policies correct? And the third is that, is the funding appropriate and adequate? And if we go to the issue of the participants, I remember my first audit job. It was a very big banking audit. And I was reviewing a particular bank reconciliation, and I queried a lot of things. At the end of it, my manager summarized all of my queries in one word. He said, this account has not been reconciled. I think we need to call time on the privatization process. If you asked me, if almost a decade after privatization, we're still in this stage, we need to critically look at privatization. So I think that we need to look at the fact that the participants have borrowed maybe close to $1 trillion with interest from the banking system. Tariffs are now approaching international parity, and we still do not have power. So I think that one issue that needs to be looked at frontally, particularly starting from the disco sector, is that if you've not been able to pay back the loans you owe the banks, it provides a basis for saying that we need to look at other players into that sector. So I don't think that we have the right players in all of the institutions, in all of the organizations. There may be a few exceptions, but we must be brave and bold to call time. Let me say, I'm not recommending renationalization. We shouldn't give these organizations back to government. But CBN, with the banks they owe, and NEC, can, on the platform of loans which are not paid, use it as a platform for introducing a completely new program of bringing best-in-class players. if we don't do this, I don't think we're going to go very far. That's the point number one about players.
Now,
if you permit me, I can move on to the
yes,
second point.
please go ahead, Kola.
Yeah,
go ahead, yes.
Now, the second point about policy is that if we're able to do that, where a number of players who are in default, by negotiation, agree with CBN, the banks, and NAC that it is time to introduce other players, we should try another model. Some governments, the previous governments have done a lot of work. I mean, several figures have been bandied: $8 billion, $9 billion, $10 billion, $16 billion that was invested in the power sector. What we tried to do was to invest in power projects. If we do the phase one of getting to a stage where, because of default, we can invite new players, we should invite, the basis of the invitation should be finding a global best-in-class player from whom we will buy power, not power projects. What do I mean? A player with whom we contract to say, you will arrange to deliver to the consumer 20,000 megawatts of power per day by year 4 or 5, growing to 25 or 30,000 megawatts. We are not paying you for projects. We don't care how you do it. We'll give you the permits, the licenses, but your job is to get power to the last mile. Off the back of my head, at international comparable prices, that would be a project of between $8 to $12 billion. I'm sure we can find best-in-class players who will accept that. I think that the basis of intervention in the sector has to be finding players who we will buy power from, not who we will contract to do power projects.
If we look at...
That's a radical change.
Yeah, just a quick one from here.
Yes, Bosin.
Ms. Ayeye, about... So if we look at, for example, if we use the Dangote refinery as a template, this is a private sector investor who was putting between $9 to $12 billion together to build a private refinery all the way from scratch. So what we did under the Jonathan's administration was to privatize or partially privatize the Gencos and the Discos, again, because the federal government still owes 35, 40% here and there between the Gencos. So they're not 100% privatization. That was not what we did 5 years ago. So in terms of said, do projects, so you want greenfield. The Azura Power Project is a greenfield project. You saying perhaps we need to call the big boys from around the world, from Germany, Georgia, Ukraine, perhaps in the UK or the US, to come in here and get fresh licenses and get power to the last man on the pole.
I think you've given licenses to some people. So you have to deal with the licenses that you've already provided. Otherwise, you enter a legal problem. What I'm saying is, you don't have to cancel licenses. You don't have to. But there is an easier way. These folks are in default to the banking system. That is also ₦1 trillion that could have been available for the economy to use. If you are in default, there have to be consequences. And I'm saying that by preferably negotiation, and then if negotiation fails, by the fiat of the banks, you take over those institutions between CBN, NEC, and the banks. And so you have a platform of re-inviting new players to manage these institutions. But I'm not saying that the base of that management will be new global best-in-class players who you will be contracting with. That when we give you organization 1, 2, 3, 4, and 5, from end to end, we are not it's not our headache how you find the power. It's not our headache how you transmit it. Thank God transmission company can be part of that concession because it's still part of government. And the discos who fail and who we've taken over can also be part of that concession. What we are contracting with you to do is that take or pay. You will commit to deliver 20,000 megawatts per day to the end consumers, industries, residents, commercial, and public sector. We will pay you on a daily basis and we'll sign a guaranteed contract of 10 years. And as I said to you, that will be a contract of between $8 to $12 billion. We will find best-in-class players that kind of contract will interest. And we will get World Bank payment guarantees. So they would not necessarily not be taking Nigerian risk. Now, this will need to be supported by legislation, and there needs to be an arrangement where the federal government and the state governments come into that payment mechanism, and that operator will be responsible for collection and for reimbursing governments for what they pay because collection is an important part. Now let me talk about government ownership. By the time this player comes in, the 30-40% that government is holding in a number of these organizations will appreciate in value. So even paying for this contract can over time come from divestment of what government is holding in some of these existing organizations.
So who...
Because I'll add one more point. We should not hide behind a finger. Sorry, 1 second, Bosi. We shouldn't say it is because government owns 30-40%. Government is not the one that has been running these organizations. The private sector operators, who are the majority stakeholders, are the ones running the organizations. I do not think that the private sector participants can say in good conscience that it is the government's 40% that has been a problem. That cannot be true.
So who sets the tariff, therefore, under the arrangement that you are proposing? How do we resolve that?
You know, Bosi, this is one of the most painful parts. You know, if you go online and you check the tariffs for the 11 discos, tariff is no longer as big a problem as it's been made out to be. Average international tariffs is about 35 naira. And tariffs across the 11 discos, some are in the 20s, some are in the 30s, some are in fact in the 40s and the 50s. And we have not added estimated billing, which bumps up effective tariff. Tariff is no longer the big problem. Tariff is close enough to international parity. What is happening is that we have players who don't have the capacity to invest and manage the networks. Let's say it as it is. There may still be some room for slight adjustment in tariff, but tariff is not the biggest problem. How do you have a situation where you have aggregate technical, commercial, and collection losses of over 50%? How can you make money? So that tariff problem, maybe it was the case, as of today's tariff is exaggerated. That is not the biggest problem.
Ayeye, the CEO at GDL Asset Management, thank you very much. This is quite an electrifying conversation. But I'm sure the Buhari's administration will be looking at the expiration of that 5-year initial contract, which they had with the first privatization that the Genesis administration. That happens this year. So let's see what the president would do in his second term. Thank you so much for coming. Have a great day and a very nice weekend.